All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Tuesday, everybody. Today is July 28th, 2026. Our top story, once again, is mayhem in Korea. It's damn near a daily basis these days. The KOSPI index, otherwise known as Samsung and SK Hynix, was down 11% last night, or nearly 11%, just under that level. Circuit breakers tripping once again. Again, almost a daily occurrence. SK Hynix and Samsung leading the sell-off. Retail investors, known locally as ants in South Korea, are getting absolutely destroyed in this sell-off. So what is going on that caused this sell-off in South Korea? To a certain extent, it was an extension of the sell-off that happened in the States yesterday. And to a certain extent, it's being affected by news in Europe and China. Let's talk about all of these AI bubble stories all together, shall we? First of all, yesterday a story broke midday about some unnamed Chinese company based out of Shanghai, a state-backed enterprise, is coming up. They're going to start making DUV machines. DUV stands for deep ultraviolet lithography. This is equipment that makes chips. So a Chinese company is going to make the equipment that makes chips. Now, DUV is older generation equipment, right? This deep ultraviolet lithography. Don't confuse that with the high-end stuff that the Dutch company ASML makes, right? They make EUV, extreme ultraviolet lithography equipment. That is the more high-end. It can do smaller nanometers equipment. So the Chinese are going to be making this lower-end stuff. Now, that didn't stop ASML from selling off. ASML pretty much has a monopoly on the chip-making equipment business. Competition from the Chinese, not good for ASML stock. It also wasn't good for the memory stocks because, look, right now, Micron, SanDisk, Samsung, SK Hynix, they've got pretty much a monopoly on the memory business. And Sam Altman is buying all the freaking memory, so they're raising their prices. Well, remember, we had this Chinese company, CXMT. They just IPO'd earlier this week. They had like a 500% run on their IPO. You've also got this story about Moonshot and their Kimi K3 AI model. And now we've got all this debate about banning open source models going on in this country because Sam and Dario want to protect their business models. Guys, there is a narrative of increased Chinese competition in the AI space. And these AI stocks are getting clobbered because of it. And whether we're talking about chip makers, chip makers, or AI models, either way, this trend of increasing competition from China is starting to weigh on these companies. Now, on top of that, we had worries yesterday about circular financing. By any measure, any way you look at it, the market should have been ripping yesterday on that big drop in oil. Oil dropped almost $10 a barrel at one point yesterday. So why weren't stocks ripping on that news of the not ceasefire going on in the Middle East? And they weren't ripping yesterday because of that story about Nvidia's mother of all round trips, that $250 billion round trip that could become $600 billion or $750 billion if you want to throw in the memory deal that they're doing. Nvidia just buying all of their own product. And the market is finally starting to see through this. Now, also going on today with Nvidia, this is fun. This is a lot of fun here. Nvidia staff have been detained in Taiwan for China chip smuggling. Jensen, you got some splaining to do. Remember that story that Jensen Huang said didn't exist, the Chinese chip smuggling ring that all the AI bros who love to talk shit on Twitter told me I had no proof of, even though I had pictures of guys in China saying, look at my illegal Nvidia GPU that I got despite U.S. export controls. Here it is in China, crates full of SMCI servers in the background. Yeah, other than all the proof, there's no proof, right, guys? Right, you adorable AI trolls, you. Yeah, well, now we've got Nvidia staff have been detained in Taiwan. Now, this is new because historically it's been isolated to Supermicro, right? We had Wally Law, Supermicro's accounting fraud specialist, who was fired and then rehired after 2 accounting frauds ago. Well, he was just fired again after he got indicted for the chip smuggling case and then Several other U.S. SMCI employees got indicted, and then Taiwan raided Supermicro's office over in Taiwan. Several more Supermicro employers got arrested. Then now we've got Taiwan raiding Nvidia's offices and hauling away one of their guys. But again, Jensen says this whole thing doesn't exist. So perhaps it's all just a misunderstanding, and one day we'll all look back on this and laugh. Or maybe one day Chinese drones trained on this equipment are going to start landing on sailor and Marines' heads, in which case that would make Jensen Huang and Wally Law and Charles Lang over at Supermicro, that would make them all a bunch of traitors. But hey, again, everybody tells me I have no proof of this. So there we go. By the way, shout out to Kakashi on X. Kakashi has done a fantastic job since day one documenting the China chip smuggling operations, and a couple of other folks that I can't talk about that I have spoken to over the years who have done some excellent work on this story. Thank you guys for everything you have done there. All right, also going on this morning in the AI space, BlackRock and Meta appear to have dodged a bond bullet as they were trying to sell billions of dollars of debt for a Meta data center that will be funded via a special purpose vehicle that BlackRock is setting up. They managed to eke by with an investment grade rating on these bonds, even though the interest rate these bonds were sold at was well into junk territory, which, so who's right? Is it the bond market that was giving them a junk rate, or was it the ratings agencies who are notoriously blind and asleep at the wheel who somehow just rubber stamped an investment grade rating on this? One of these two is wrong. Bond market is usually the right one. Anyways, they managed to get that deal through, and now it's actually, those bonds are trading up a little bit in the secondary market since they got that one done, which is still not the all clear, right? That means these companies are having to borrow at elevated interest rates. It's getting more and more expensive to keep borrowing to build these data centers, but at least it's not a repeat of what SpaceX did last month. Remember, a couple of hours after their IPO, SpaceX dumped $25 billion worth of bonds on the market, and those bonds today are trading like low 90 cents on the dollar versus what they sold at just about a month ago. So at the very least, it's only been a day, but BlackRock and Meta appear to have dodged that particular bullet that hit SpaceX in the debt market. Now we've also got the Pentagon is putting data centers on Army bases all over the country now. Looks like a little bit of a backdoor bailout, because when you put a data center on an Army base, suddenly there's no public hearings about impact and water and power and everything. No, the Army Corps of Engineers just handles your environmental review, and up goes the thing. And these are not Army data centers, mind you. These are commercial data centers that will be operating on Army bases for some reason. Again, the government will try to figure out a way to bail out this bubble. I don't know if they'll be able to, but they'll sure try. What else we got? Singapore's central bank has now joined a long chorus of central bankers worried about threats to financial stability posed by the AI bubble bursting. Congratulations, central bankers of the world. You are only 3.5 years behind some guy in a corner office in his house in Southeast Pennsylvania. You guys keep up the good work. Way to get way out in front of that one. What else we got going on? Boeing Boeing is having a pretty good day. Boeing reported earnings. Now, they posted a bigger loss than expected, but they delivered more planes than were expected. They took a big loss on their new Air Force One model. That stock is up. Klarna stock is ripping this morning on a story that they will be chosen by Apple to run their new hardware leasing program. This is interesting. Instead of buying an Apple phone and then paying your monthly payments, you will lease your phone from Apple and then upgrade at the end of your lease. And I can't help but think you'll own nothing and be happy. It sure sounds an awful lot like that, but Klarna is the one chosen to do that. And last one of the day, we've got a story about gold in China. Now, this is interesting because there are certain individuals, I'm not going to name names, but there's a lot of people in the precious metal space who love to talk about anything scary China and gold because they know it tends to make older, wealthier, typically conservative Americans rush out to buy gold. And so they will pound the table on China on bricks and, oh, China's buying all the gold in the world. You better buy some gold. Never mind the fact that Rosalind Capital is going bankrupt and all this other shit that goes on in the gold space. We got a story about Laopu Gold. Their stock got clobbered yesterday. This is a luxury Chinese gold dealer. They do jewelry mostly, not bullion. They posted strong growth, but slowing very rapidly. Perhaps a story about the health of the Chinese consumer losing his appetite for gold here. And you'll never hear the pumpers on any of these gold channels ever talk about a story like this. Yeah, the central bank in China is buying gold hand over fist, but the average Chinese person is not. Not according to this story. Stick around to the end of the show for that one. But first, we must shrink my big melon of a head and let's see what's going on in the world of finance. Don't forget the like button and the subscribe button for the algorithm so you can come back tomorrow and have your coffee with us melon heads because we do this every day. Right now, the S&P 500 is higher by 13 points, 0.18% in the green. The Dow is up 485 points, 0.93% in the green. Good morning for the Dow. Those Boeing earnings are helping here. The NASDAQ, though, in the red, once again, 170 points lower, 0.61%, taking its cues from South Korea this morning. The dollar is a little bit weaker here, off by 2 basis points at 101.51, relatively unchanged. Looking over at the bond market, we got yields lower again here. The 30-year yield is at 5.119. That's lower by a half a point. The 10-year yield is off by almost 2 points at 4.622%, still above that 4.6 level, though. The 2-year yield, 4.299. That's lower by 2 points and change. And the 1 month at 3.741. That's lower by a point and a half. We've got bond yields are lower across the board. Looking over at precious metals here, we've got gold is sharply lower this morning. That's interesting on lower yields and a weaker dollar, and gold is down. $4,033 an ounce for spot gold. That's off by 43 bucks or 1% lower. Spot silver is at 57.23, lower by $1.19 or 2% in the red. I still liked the shiny. Copper is lower by 0.87%. Platinum 1.2% lower. Palladium 2.2% lower. Man, metals down across the board. And oil is lower again, $81.02 for September WTI futures. That's off by $1.58, another 1.9% lower. Let's talk about Bitcoin real quick, and then we'll do oil. Bitcoin is down by 320 bucks here, $63,374. Bitcoin lost about $2,000 yesterday. By the way, my friend Joe Brown over at Heresy Financial put out a pretty good video about Bitcoin yesterday. I highly recommend you guys check that one out. He's basically said what I've been saying for the last couple of months about the 4-year cycle, and where we're at in that 4-year cycle means lower prices on the horizon for the short term. All right, but back onto oil. Let's talk about that. We mentioned before, $81 and change for oil, down almost 10 bucks yesterday. Big drop, again, on stories about the cessation of hostilities or a temporary pause, not even a ceasefire, whatever the heck is going on in the Middle East. Still plenty of shooting going on between the Saudis and the Houthis. The Iranian-backed militias in Iraq were shooting yesterday. The Iranians are bombing the Kurds. There's no shortage of violence in the Middle East. But the narrative was, okay, less violence between the U.S. and Iran directly. I guess that's what passes for optimism these days. But we got this one in Business Recorder this morning. Saudi Aramco considers new pricing for city career oil exports to Asia. It looks like the Saudis found a bypass for the bypass. It's going to be expensive, but the oil will still get out. Saudi Arabia is considering a new pricing mechanism for crude loading from Egypt's City Career port for Asia to reflect higher shipping costs after rerouting exports through the Suez Mediterranean pipeline, 3 sources with knowledge of the matter said on Tuesday. Yemen's Iran-aligned Houthis imposed a naval blockade on Saudi oil shipments through the Red Sea's Bab el-Mandeb Strait last week, forcing the world's top exporter to divert more supply for exports via Egypt. Since the start of the U.S.-Iran war, which prevented ships from entering the Gulf via the Strait of Hormuz, Saudi Aramco has been exporting most of its crude from the Red Sea port of Yanbu to Asia, diverting supply from Ras Tanura using its east-west pipeline. All right, so instead of going out the Strait of Hormuz, they pumped the oil west to Yanbu, and they went south through the Bab el-Mandeb and on to Asia. But you can't do that now because the Houthis are shooting at the Saudi tankers, so they have to go north, and it looks like they've figured out a way to do that. Following the Houthis' threat, Saudi Aramco will now ship oil from Yanbu to Egypt's Red Sea port of Ain Sukna. I'm sure I'm mispronouncing something here, which is then carried by the Suez Mediterranean pipeline to City Career. With the latest diversion, the producer could adjust its pricing to take into account higher freight costs and the longer route via the Mediterranean and Gibraltar, and then around the Cape of Good Hope, Another 3 sources said one of these sources estimated that this could cost Asian buyers around $10 million extra per shipment, or about $5 a barrel. All right, so now we got to pipe it across the desert, the Arabian Peninsula, load it onto a ship, sail it up the Red Sea, load it off the ship through a pipeline across the strait there, the Sinai, whatever you want to call it, then reload it onto a bigger boat in the Mediterranean, sail it through the Mediterranean, around the port of Gibraltar, down around the Horn of Africa, through the Indian Ocean, and then they can reach Asia and the Chinese market. All that is going to add $5 a barrel, which, by the way, is pretty miraculous that that's only going to add $5 a barrel to the cost. But it does show you the oil will still get out. It's just going to be more expensive. All right, here's the big one, though. World shares mixed while South Korea's KOSPI sinks nearly 11% on heavy selling of chip makers. Once again, things are going nuts in South Korea. South Korea's KOSPI index plunged nearly 11% on Tuesday on heavy selling of computer chip making stocks that have been battered recently by waves of fears that the boom in AI may turn out to be a bubble. You think? European shares opened moderately higher after a day of losses for most Asian markets, while U.S. futures were mixed. Let's see. A key factor driving this selling of AI-related shares, analysts said, is the expectation that rising competition from Chinese AI startups and chip makers might undermine gains for the leading companies whose shares have skyrocketed in the past months due to the AI frenzy. A 466% jump in the price of Chinese memory chip maker CXMT in its trading debut Monday underscored such concerns. CXMT raised at least $8.6 billion in its IPO in Shanghai, but its shares dropped 4% Tuesday. Crimea River shares down 4% after rising 466% at the IPO. Tuesday's chip stocks sell-off also followed a report in the technology news publication, The Information, that China had begun mass production of homegrown deep ultraviolet, or DUV, chip-making tools. Such equipment is used to print minute circuit patterns onto silicone wafers. We believe the market was likely spooked by the progress of China's chip-making equipment capabilities and was worried that this progress would threaten the competitive position of global chip-making and chip equipment leaders, said equity analyst Jing-Jae Yu of Morningstar. And all that translates into this big red candle in the KOSPI yesterday. Now, guys, we were talking about how, okay, we were in this channel for a little while, and it looked like maybe the market was trying to break out of that channel. We talked about that yesterday. We're like, we're going sideways for a few days. Maybe we're putting in a bottom, or maybe it's a continuation pattern. Well, we got our answer. It's a continuation pattern. Big red middle finger to South Korean retail traders here. Guys, this sell-off in South Korea, and again, where are we at? We're pretty much back to where we were in February. All right, so that ridiculous March that we had, which was just obscenely how fast stocks in South Korea rose. But still, we've only given up a few months of gains. Look at what this index is still looking like just over the last year or two. It's still up several 100%. So don't think it can't fall further. It can fall a hell of a lot further. And bubbles are funny like that. All right, let's elaborate a little bit on that story that drove a lot of this. ASML slides on report of China starting DUV tool production. ASML holding share slid to the lowest since early June after a report that a Chinese state-backed company has begun mass producing certain chip-making machines, posing a potential threat to the Dutch firm's sales. A Shanghai-based company, they didn't name it, has started making immersion deep ultraviolet lithography tools, the information reported on Monday, citing unidentified people. The report didn't name the company. It has assembled development teams from other Chinese companies, including Shanghai Yuliangsheng Technology, for this, the report said. I hope I pronounced that right. The stock fell as much as 8.3%. Let's scroll down a little bit here. The Dutch company makes machines that can print intricate patterns of transistors on silicon wafers. DUV machines are often called the workhorse of the semiconductor industry and are less advanced than ASML's sophisticated extreme ultraviolet lithography tools, essential for manufacturing critical AI chips at scale. ASML has been banned from exporting its cutting-edge tools, namely the EUV lithography machines, to China as part of U.S.-led export controls. It's also restricted from selling its most advanced DUV machines to the country. The Asian nation was the company's third largest market in the second quarter, though the tools ASML ships there are 8 generations behind the most sophisticated models. All right. So apparently ASML has only been selling the old crap to the Chinese, and it looks like Chinese probably managed to get their hands on some of the newer stuff. They reverse engineered it, and now they're going to try to make it themselves. And ASML stock got clobbered yesterday. It was down about 7% trading yesterday. It's down another 4.5% ahead of the open this morning. This is priced in US dollars, $1,577. Let's look at this over the last 5 days, down 8.1%. So ASML stock, though, still having a pretty good year to date, up 54%, even after these recent losses. And my favorite company in the world to talk about, Nvidia staff detained by Taiwan in China chip smuggling case. This can't be right. That guy in the smelly leather jacket told me that this wasn't happening. That's weird. Taiwanese prosecutors detained an Nvidia employee as part of a probe into the alleged smuggling of AI chips into China, thrusting the company into high-profile case concerning the black market for its products. Local investigators searched the home of the staffer and his desk at Nvidia's Taipei office on July 24th, according to people familiar with the matter. The courts later granted prosecutors' request to detain the person on allegations of forgery and breach of trust, the people said, asking not to be named, as the employee's identity isn't public. On Tuesday, Taiwan's Keelung prosecutor's office said investigators searched the residence and office of a man surnamed Chang. That should narrow it down. Last week, in connection with a chip smuggling investigation that they first announced in May. Chang had been detained, prosecutors said, without naming the person in full or identifying his company affiliations. They haven't accused Nvidia or any other company of wrongdoing. I love when they do this. Like, the company hasn't been named. No, they didn't accuse Supermicro of doing anything wrong. They just arrested 6 of their employees. The company's not doing anything wrong. It's just all the people who work for the company. That's all. Yeah. Nvidia didn't do anything wrong. It's just Mr. Chang. It's a shame this one Chang could screw things up for this whole wonderful company. The move may be the first known instance of government authorities taking legal action against an employee of Nvidia in a chip smuggling case. The Taiwan effort is one of at least 8 semiconductor diversion probes across 4 jurisdictions, as officials from Washington to Singapore crack down on a shadow trade that Nvidia CEO Jensen Huang once denied exists. Yes, tens of billions of dollars worth of these chips have illegally made their way into China, but it's just one guy. It was just one Chang at Nvidia made this whole big mess. Him and 4 or 5 other guys at Supermicro. Yep, tens of billions of dollars worth of chips illegally making their way into China, but it was single-digit individuals, certainly not companies that stood to gain tens of billions of dollars in sales that were doing it, right? Nvidia stock down another 0.8% this morning, $195.03, after falling 5% yesterday, despite that $250 billion deal with OpenAI, because the market realizes the round chipping is getting so ridiculous we can't ignore Jack anymore. And so Nvidia sold off 5% yesterday, down a little bit more on this news this morning. Full disclosure, I am short Nvidia. BlackRock dodges AI bond trading flop after offering junk yields. Junk yields, but not junk ratings. Remember, this is still investment grade, A number 1 dog shit. But even though we can't sell it unless we offer junk yields, that's what happened with these BlackRock bonds for a Meta data center issued by a special purpose vehicle. Enron, call your office. BlackRock's $12.5 billion bond sale tied to a Meta Platforms data center rallied in early trading on Monday in a sign that relatively high yields on the debt ultimately attracted investors. The investment-grade debt for the El Paso, Texas project was sold in an offering led by J.P. Morgan and Morgan Stanley at a 7.534% yield, a level more common in junk bonds. So it's investment-grade debt, thanks rating agencies, but it's got a junk yield attached to it, which means somebody said, let's call this investment-grade just because, even though we can't sell it until we lower the price to junk levels. That seemed to draw investors in the gray market, where bonds can be bought and sold before official trading even begins, even if demand during syndication looked tepid by one standard measure. In the secondary market, the debt was quoted at a yield of around 2.6 percentage points more than Treasuries earlier in the session. According to people with knowledge of the matter, that is tighter than the pricing of 2.875 percentage points above Treasuries. So what's happening is these bonds, they're not even a day old. They're already trading in the secondary market, and they're already up in value from where they were initially issued at. So they lowered the yield or they lowered the price and raised the yield enough that these things are trading well in the secondary market, which is distinct difference from what we've seen recently. For the credit market, the early performance of Sopapilla, that's the name of this special purpose vehicle, by the way. It's a meta data center that BlackRock is financing, but they're calling it Sopapilla. I don't know why. Maybe because it's easier to hide it off their balance sheet that way. But the Sopapilla bonds in trading were a marked contrast to some recent bond flops from companies including SpaceX. Bond traders were stunned, and investors faced significant paper losses after the company's debut high-grade bond deal was sold in June and traded off in the secondary market. Well, the good news for SpaceX bond traders is they're not losing nearly as much money as people who bought SpaceX stock, so they got that going for them. But Meta and BlackRock were able to get this thing done. They were able to get this bond sold, but they had to pay up for it. They are having to pay a lot of interest in order to borrow this money. It's getting harder and harder. The bond market isn't telling them no, but it is saying, F you, pay me. Thank you, Henry Hill. And the government's backdoor bailout is already underway. Pentagon plans AI data centers at military bases across multiple branches. What do you do when you can't get past the community zoning boards, when the protesters show up at the public meetings, when the environmental review tells you no? Well, you get President Trump to sign an executive order saying you can put it on an Army base. That's what you do. At Dugway Proving Ground in Utah, on ground the Army's own contracting documents describe as previously used for grazing, a company owned by two of the largest investment firms in the world is preparing to build a data center. The site sits about an hour's drive from the nearest community on the installation where the U.S. military conducts its primary chemical and biological weapons testing. 3 parcels there total roughly 3,500 acres. One of them, 1,200 acres, is already spoken for. It's one of at least a dozen military installations the Army and the Department of Air Force have opened to commercial data center developers over the past year and a half. 2 of those deals are real. The rest are still proposals. So this is important. These are commercial data centers, private enterprises. This is not being built just for the Army, although the Army may end up using them. In late March, the Army conditionally selected 2 companies to enter exclusive negotiations to build and operate commercial hyperscale data centers on Army land. Carlyle, the global investment firm, was picked for roughly 1,384 acres in Fort Bliss, Texas. Cyrus One, a data center operator jointly held by funds managed by KKR and BlackRock, was picked for the parcel at Dugway. Each project is estimated to cost about $2 billion. The companies will be responsible for financing, building, operating, maintaining, and eventually decommissioning the facilities, the Army said, on what it called underutilized but non-excess Army land at no upfront cost to taxpayers. In exchange for the land, the service gets access to computing power. It all runs through the Army's Enhanced Use Lease program, driven by a Trump executive order directing agencies to open non-excess federal land to data center development. The U.S. Army Corps of Engineers is handling lease negotiations and environmental review. Well, since the Army Corps of Engineers is handling the environmental review, there goes all your water concerns. They magically disappear because you're on Army land. Isn't that nice? Guys, this is just one of the ways the government is helping to keep this bubble inflated. It's not going to be enough, but it's going to help. Even as all that is going on, we've got yet another central banker warning about the AI bubble. Singapore's MAS flags AI pullback as threat to global markets. Not just the U.S., not just South Korea, global markets. Singapore's central bank warned that uncertainty over sustaining massive AI investments is a key risk for global growth and financial markets, citing this along with the threat of a prolonged re-escalation in the war in the Middle East. A surge in investment in data centers, chips, and computing infrastructure and semiconductor capacity has boosted global economic growth, which has stayed resilient despite repeated shocks from higher tariffs to the war, said Chi Derjun, managing director and monetary authority at Singapore. There are significant implications whether the AI boom continues or if there is a major curtailment in funding in this area, she has said in remarks that accompanied the MAS's release of its annual report. Again, keep in mind that BlackRock story about all the problems they were having trying to get that bond deal done. The market is already starting to say funding in this area is running dry. A big pullback is likely to sharply weaken economic expansion around the world, he said. Financial stability risks could also come about through the equity, credit, and loan markets exposure to unsustainable business models with deteriorating cash flows and weak credit terms and complex funding structures, he added. Holy shit, where have you been? God, you got to love. First of all, financial stability. That is like economic doom in central banker speak. But he's talking about, okay, stock problems, too much debt, loan market exposure, unsustainable business models that lose money, weak credit terms, complex financing structures. If only some guy, some one-man YouTube operation has been in his house morning in and morning every freaking day at the same time warning about this for freaking years. Oh, but good. Now the Central Bank of Singapore has caught up. Good job, guys. Global growth, investment, and financial market performance have become highly dependent on projections of large and increasing investment in data centers and semiconductor chips, continuing well into the future, Chia said, pointing out this is particularly so in the U.S. capital markets and semiconductor exporting Asian economies like South Korea. Singapore's central bank joins authorities from around the world who are increasingly alert to the risks posed by the rush to AI. Bank of England Governor Andrew Bailey warned about the fallout from an AI stock bubble bursting, that it would reach the UK economy and could prompt a response in interest rates. The Bank for International Settlements, an umbrella group for the world's central banks, cautioned that the AI investment race could turn into a debt-fueled boom into a bust. Still, Federal Reserve Chairman Kevin Warsh has pushed back on commentary that surging investment into AI is stoking inflation, saying the boom won't necessarily lead to persistent price pressures. Yeah. Have you seen the price of memory and anything with memory in it lately? Have you seen the price of electricity, Kevin? Have you seen the price of copper, Kevin? Oh, but don't worry. There's no evidence that AI is leading to pricing pressures. Thank you, Kevin. Yeah. So another central banker saying what I've been saying for years. Good job. Thanks, Singapore. All right. Meanwhile, we've got Boeing earnings today. They were not terrible, but not awful, but they were okay. Boeing posted bigger loss than expected as Air Force One costs weigh on results. Boeing reported a bigger than expected loss for the second quarter as the aircraft manufacturer's long-delayed Air Force One program weighed down results. Boeing took a $280 million hit on the program to deliver two 747s that will serve as the next generation Air Force One aircraft to the U.S. government. As it said, it ramped up investment for that plane. It said it still expects the first delivery in 2028. Let's see. Their loss per share was 76 cents adjusted versus an expected loss of 30 cents a share. So the bottom line wasn't so good. Top line beat, though, 24.56 billion versus 24 and a quarter expected. The aircraft manufacturer, a top U.S. exporter, increased revenue 8% in the second quarter to 24.56 billion from a year earlier, with gains across its business, including increased deliveries of commercial aircraft. Boeing has been ramping up production of its best-selling 737 MAX planes to 47 a month, with further increases planned. So it looks like the worst of that 737 MAX fiasco is behind them now. Boeing's commercial aircraft deliveries in the second quarter rose 14% from a year earlier to 171 planes from 150 a year earlier. Now, this is interesting. Remember, they posted a bigger than expected loss, 76 cents per share, but free cash flow of $631 million came in well above the $177 million cash burn analysts expected. And that compares to $200 million in burn in the second quarter a year ago. Honestly, I didn't open the earnings results and study the charts. Just didn't have time to really dig into the earnings this morning. But, you know, a loss of 70 cents a share, almost double, 2.5 times what was expected, and yet $631 million in free cash flow. I'm not sure where this loss at Boeing came from, to be honest with you, because they ended the quarter with a hell of a lot more money in the bank than they started it. So all in all, it wasn't a terrible quarter for Boeing. That loss per share is kind of rough, but the stock is up 2.5% here, $216.54, higher by about $5. Although Boeing stock is still just barely red for the year. It's been doing a whole bunch of nothing this year. Meanwhile, Klarna stock climbs after Apple reportedly picks Klarna to power its new device leasing service. Klarna shares rose in midday trade on Tuesday after a Bloomberg report stated Apple is preparing to launch a new leasing program called Apple Upgrade on July 28th. That's today, backed by the fintech company. Klarna stock climbed as much as 3% in midday trade yesterday. According to Bloomberg, Apple's Upgrade is expected to launch on July 28th and will function more like a subscription than a traditional installment plan, covering most iPhone, Mac, iPad, and Apple Watch models. It'll be available at Apple's physical retail stores and online, initially only in the U.S. Instead of purchasing a device outright, customers would make monthly payments for eligible phones, Macs, iPads, and Apple Watches. At the end of the lease, users could upgrade to a newer model, buy the device by paying its remaining value, or simply return it. Some transactions may also include additional fees. The report said that the lease terms would vary by product. iPhones and Apple Watches would carry 24-month terms, while Macs and iPads would be leased over 36 months. Customers would also need to complete a soft credit check before approval. Okay, so number one, at least Klarna is checking your credit. That's good. I mean, they don't even check your credit now when you go to do buy now, pay later. But I can't help but think this one resembles that whole you'll own nothing and be happy thing. And by the way, there's no chance in hell I am going to surrender my phone full of pictures of my kids and my personal data to some schmuck at an Apple store just because my lease is up. So I don't know, man. This may drive me out of the Apple ecosystem. We'll have to wait and see. But for right now, Klarna is down 1.5% today. It was up about 3% yesterday, $18.21. Over the last 5 days, Klarna is still red for the last 5 days. So we'll see what happens after they announce this one. And last one of the day. Chinese luxury jeweler sheds $2.1 billion on 66% growth outlook. Now, that doesn't make a lot of sense. 66% growth sounds fantastic, but you got to look a little bit closer here. Laopu Gold lost $2.1 billion in market value on Tuesday after the Chinese jeweler flagged slowing sales, unsettling investors who had been betting on some of China's most viral consumer brands. The company's Hong Kong-listed shares slid nearly 24% in Hong Kong at the close. That's the most since the Beijing firm's June 2024 listing. A day earlier, Laopu projected first-half revenue growth of 60 to 66%, reaching 20.5 billion yuan. That's a really good growth number, but though still a strong year-on-year, the outlook marks a sharp slowdown from the 251% revenue surge recorded in the same period last year and fell short of expectations. So that's the rub. That growth is slowing dramatically. Still 66%, but down from 251. Both Goldman and Citigroup cut their earnings forecast following the update. The pronounced decline reflects Laopu's high sensitivity to gold price swings as consumers prefer weight-based products over fixed-price ones in a down cycle, Morningstar analyst Jeff Zhang wrote in a note. Laopu's deceleration mirrors a broader cooling across China's once viral consumer brands. From makers of collectible toys like Labubu, oh my God, I'm so glad those went away, to beverage chain Chaggy, which surged on speculative buying and social media hype before demand normalized. For Laopu, the retreat in gold prices has accelerated the shift away from the explosive growth it enjoyed over the past 2 years. So a lot of Chinese consumers went nuts, bought a lot of gold jewelry last year. We had those explosive growth numbers. That growth is now tapered off. Not surprising considering gold is down some 25% and change from where it was at its highs in January. And so Laopu stock taking a hit here, down almost 24% yesterday. This is priced in Hong Kong dollars, 302.2, off by 94.2. So this one lost a lot. And look, guys, I don't know that there's really that much signal here because the Chinese central bank is still buying gold hand over fist. They are still putting up growth numbers, but look at what this stock is doing, down 58% from where it was trading last fall. Obviously, the top is in for this one, and you're never going to hear some of these gold dealers, pumpers who go on YouTube and they're just always spinning this narrative about China's going to eat our lunch, China's going to take all of our gold, and the dollar debasement in the BRICS countries. It's all rhetoric. It's a narrative that has been crafted to convince older, wealthier Americans to pile into gold. And look, I'm not saying I'm against gold. I own a lot of gold myself. It's probably one of my biggest positions. But I own it for the right reasons, not because of some doom scenario that's been painted on YouTube. All right, I own it for other reasons. And it's important to question these narratives, is why I highlight stories like this. So, yeah, maybe the Chinese consumer not quite as healthy as we've been hearing. Hey, anyways, I just want to say thank you guys for having your coffee with us, Melonheads, this morning. Don't forget the like button, the subscribe button, all that algorithmic goodness on the way out, should you feel so inclined. Thank you as well to my magnanimous Melonheads and members on Patreon, YouTube memberships, and Buy Me a Coffee for supporting the channel. You guys are awesome. Links down below if you want to check those out. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small, dream big.